Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today, we're diving into a proxy statement from Pointe Homes, a large homebuilding company. And before you think this will be dry, just wait until you hear about the executive's pay and how it ties to the company's performance. It's a real roller coaster, believe me. So, what's a proxy statement? It's like a cheat sheet for shareholders before the annual meeting. It tells you who's running for the board of directors, what big decisions are up for a vote, and how the company's doing on things like executive pay. First up, the annual meeting is on April 16, 2025. Stockholders get to vote on electing directors, giving an advisory opinion on executive compensation, and ratifying the company's choice of its accounting firm, Ernst & Young. It is pretty standard stuff, but it matters because shareholders have a say about the future of the company. Time to meet the nominees for the board of directors. There are 6 people up for election, including Douglas Bauer, the CEO, and other experienced folks from real estate, investment, and retail industries. The board seems to value a mix of skills from finance to marketing, and they also highlight diversity with women and minorities represented. Seems standard enough, but we will have to take a deeper look. Let's meet the CEO, Douglas Bauer. He's been with the company since 2013 and has tons of experience in home building and finance. The report emphasizes his knowledge of the business and the industry. Having the CEO on the board makes sense since he brings unique insight. Stephen Gilbert is the chairman of the board. His background is in private equity and investment management. The board values Gilbert for his leadership and experience on other public company boards. It's always helpful to have someone who's seen how other companies operate. Next up is R. Kent Grahl. He is described in the report as having extensive experience in real estate development. The company seems to be emphasizing that he is an advisor of the board and his role is focused on positive returns for the company. Now let's talk about how Pointe runs the show. They have an independent board, meaning most directors aren't company employees and can offer unbiased advice. They also have key committees like the Audit Committee to oversee financial reporting and the Compensation Committee to decide how much executives get paid. The Board of Directors has determined that 5 of its current directors, constituting a majority of directors, satisfy the listing standards for independence of the NYSE. This is a positive sign since you want directors that are not being influenced. Risk oversight is a big deal for any company. Pointe's board actively manages risk through its committees. The Audit Committee looks at financial risks, the Compensation Committee makes sure pay doesn't encourage risky behavior, and the Nominating and Corporate Governance Committee handles ethics. Alright, let's get to the juicy part, executive compensation. Pointe says their goal is to link executive pay to company performance and increase shareholder value. They use a mix of base salary, cash bonuses, and stock awards to motivate their top people. The document stresses that a large percentage of the executive's compensation is performance-based. The annual cash incentive awards are tied to revenue and pre-tax earnings for the year. Equity awards in the form of performance and time-based restricted stock units or RSUs are used to motivate long-term performance. For 2024, a good chunk of the CEO's potential pay was tied to performance metrics. The annual incentive was linked to revenue and pre-tax earnings, while a significant portion of his long-term equity awards were performance-based RSUs. They want the CEO to do well if the company does well. In 2024, the CEO's base salary was $1 million. Not bad. The document also stresses increases to the executive's base salary as well. Here's where it gets interesting. In 2024, the annual incentive target, meaning the bonus potential, for the CEO was 250% of his base salary, potentially $2.5 million. The incentive was based on revenue and pre-tax earnings goals. Equity is the name of the game. Equity is basically compensation in the form of company stocks. This, like bonus targets, is structured based on title. In 2024, the board awarded Bauer and Mitchell the most at a target of $6 million and a mix of both stocks, RSU, and stocks with performance goals, PSUs. The executives need to perform to unlock the compensation. So did the executives hit their targets? Turns out, the company exceeded its revenue and pre-tax earnings goals for 2024. This led to a payout of 181.8% of their target bonus. That's a pretty sweet payday. Now let's rewind a bit. In 2022, executives received performance-based RSUs tied to revenue and pre-tax earnings with a twist. a modifier based on the company's total shareholder return compared to its peers. To keep it simple, the better the stock performs, the better the modifier they can unlock. It turns out revenue was slightly below target while pre-tax earnings were above. Furthermore, Pointe's stock performance was in the second quartile, meaning that there was no modifier effect as it was not high enough for the executives to benefit. They get a cut but not as much since it is not top performance. So what's in store for 2025? The board approved the executive pay package and there are no major changes to base salaries or incentive targets. They will keep using equity to align interests. The agreements with the executives have non-compete provisions. If you leave the company, you can't start competing in the area. Here's a key part, the clawback policy. If the company has to restate its financials due to errors, executives could have to pay back some of their incentive compensation. That's designed to discourage risky or unethical behavior. Also, executives can't hedge their stock holdings. This means they can't use fancy financial instruments to protect themselves from losses if the stock price drops. They're in it for the long haul, just like regular shareholders. The table details how much stock the company can issue under its compensation plans. This is important because it shows how much potential dilution existing shareholders could face. As of December 31, 2024, the company had 5.3 million shares available for future issuance, which is important for growing shareholders' wealth and retaining top employees. Alright, who owns this thing? Looking at the report, a lot of the company is owned by institutional investors like BlackRock and the Vanguard Group. It's quite normal, but it can be a sign of volatility or institutional support. Officers and directors only own a small amount of the outstanding shares. BlackRock owns a massive chunk of shares as of January 2024, with almost 19% of the shares in the company. This comes with massive voting power. State Street Corporation owns 5.4% of the shares as of October 2024. Having major stakeholders is very common, and it could signal a strong support for the company. Finally, the report mentions the pay ratio, the comparison between the CEO's pay and the median employee's pay. In 2024, the CEO made about 91 times what the median employee made. I should mention the company is trying to focus on sustainability. They publish data on their website about using eco-friendly materials, reducing emissions, and things like that. This is important since a lot of investors consider sustainability. Now, let's step back and look at the big picture. Pointe is operating in the homebuilding industry, a cyclical market that can be influenced by interest rates and the economy. The company is trying to incentivize executives to perform well, aligning their interests with those of shareholders. It is interesting, however, to see executives making so much more than their general employees. Whether the executives hit those high metrics or not, they are still making large sums of money. It's a profitable business, but it comes with massive risks. Thanks for watching. If you found this corporate deep dive interesting, be sure to like, comment, and subscribe for more insights. What company would you like me to decode next? Let me know in the comments below.